Okay, if you've been keeping an eye on the housing market, you know it's been a tough climb for home buyers. It's just felt relentless. But you know what? The latest data from February is showing us a small, but I think pretty significant glimmer of hope. So let's break down exactly what happened and what it might mean for you.
So what does this glimmer of hope actually look like in real dollars and cents? Well, it all comes down to one key number that's giving potential homebuyers just a little bit more breathing room.
And there it is, $2,061. That was the new national median mortgage payment for someone applying for a loan in February. But a number on its own doesn't tell us much, right? So let's put it in context.
So that's a drop of $9 from the month before. Now I know what you're thinking, $9? That's not exactly life-changing. But honestly, in a market where costs have been going up for so long, any movement in the other direction, no matter how small, is a really positive sign.
So why did this happen? What's actually behind this little dip in payments? To really get the why, we got to look at something called the Purchase Applications Payment Index. You can just call it the PAPI. Think of it as the housing market's official affordability thermometer. Now, the really important thing about the PAPI is that it doesn't just look at the mortgage payment by itself. No, it measures that payment relative to how much people are earning. And that means affordability can get better in one of two ways. Either your payment goes down, which is great, or your income goes up while your payment stays the same. Either way, a lower PAPI score is exactly what we want to see. And check it out. In February, the national PAPI score nudged down from 150.6 to 150.0. Yeah, it's only a 0.4% decrease, but that's the hard data that confirms that little bit of relief people were feeling. So what exactly was pushing that number down?
Well, it wasn't just one thing. It was actually a combo of a few different factors working together. We saw slightly lower mortgage rates, which helped ease those monthly payments. And at the same time, incomes were growing, up 3.7% over the year. And what's really important here is that this wasn't just some one-month fluke. The index is actually down almost 10% from a year ago. That points to a more sustained positive trend.
All right, so we know things got a little better on average, but did everyone feel this shift the same way? Let's zoom in a bit and look at who really benefited from this. And this right here, this is really great news, especially for first-time home buyers. Folks who are looking for those lower payment mortgages saw their median payment fall. It just goes to show that this little bit of relief wasn't just happening at the high end of the market. It was felt in the most affordable segment too.
Okay, but this is where the story gets a little more interesting. If you break it down by loan type, FHA loans, which are super popular with first-time buyers, saw their median payment drop by almost $20. But at the same time, conventional loan payments actually ticked up a little bit. That kind of suggests that the affordability gains were really focused on buyers who might need lower down payments.
And what about when we look across different borrower groups? Well, the PAPI index, our little affordability thermometer, it dropped for Black, Hispanic, and white households. So the big takeaway here is that these gains, even though they were modest, seem to have been pretty widespread.
So far, we've only been looking at the big national picture. But as anyone who has ever looked for a house knows, real estate is all about three things, right? Location, location, and location.
And whoa, the differences from state to state are huge. Just look at this gap. Idaho's PAPI score is way up there at over 235. That means housing payments are incredibly high compared to what people earn there. Now compare that to DC or Louisiana, where the score is less than half that. It's a really powerful reminder that affordability is an intensely local story.
So the data from February paints this, cautiously optimistic picture. But that brings us to the most important question of all. What's going to happen next?
This is it. This is the critical question. I mean, it's fantastic that things got a little better, but can we really expect this trend to keep going? The housing market is always changing, and there are always new pressures just around the corner. And here's a pretty important dose of reality from an expert at the Mortgage Bankers Association. Global events can create these ripple effects that hit us right here at home, and they can mess with things like mortgage rates. So, the very same things that helped us out in February could easily get reversed, and that would wipe out these small but important gains.
So, where does that leave us? February brought a nice, modest improvement, but new risks are already popping up on the horizon. It really leaves us with this big, lingering question. Was this just a brief moment of relief, or is it the start of a real trend? Is that window of opportunity for homebuyers just starting to crack open, or is it already starting to swing shut? I guess that's what we'll all be watching in the months ahead.